All right, let's do this. Dividend investing questions. I have 5 more to go to celebrate 25,000 subscribers. It's funny, we're going to be at 30,000 subscribers soon, so I'll be answering 30 more questions. Hey everyone, I'm in the car. It's been a long day, and so I'm going to do my best here to answer these questions. And I have timestamps, by the way, in the description below, so if you want to skip to a specific question. But this is YouTube's dividend investing channel. We are 25,000 plus dividend investors strong. I have 5 questions today. These are really good ones, really good ones. And it's been a long day for me, by the way. I'm a real estate developer, commercial real estate developer, investor, and so I've been on the road all day. Very productive getting out there on the field. But now I'm making a stop on the way home. Just got out of Starbucks, got a little work done. In terms of full disclosure, I'm long Starbucks, ticker symbol SBUX. Anyways, now I'm back in the car and I'm about to head home, but I got to get this video done for you. I got to do it. Got to keep the YouTube channel going. So let's get started with these dividend investing questions. All right, so the first one is a fun one. Kraft Heinz, ticker symbol KHC. A subscriber was asking me, Ian, what do you think about Kraft Heinz now that it's dipped into the 20s? Because Ian, you said a long time ago, you don't like Kraft Heinz, you're staying away from it, but you said, Ian, if it dips into the 20s, you might look at it. So let's just look at the numbers. In the 20s, in terms of a dividend yield, this thing, they even cut the dividend, with even the dividend being cut down to 40 cents a quarter. If you multiply that by 4, you divide by the share price now of $27.65. The starting yield is a 5.8%. It is crazy that the starting yield on this thing is a 5.8%, and that's after cutting the dividend. That's just how bad this stock is doing. It's down because Credit Suisse did a downgrade, so analysts downgrade. I'm seeing a lot of analyst downgrades recently, a lot of analyst downgrades. Anyways, I'm seeing a lot of red, by the way, in my stock portfolio. We'll get a lot to this later, but stocks I own, stocks I don't know, I'm seeing a lot of red. This is a good thing because dividend investors, we get closer to our goal of financial freedom, of FIRE, financial independence, retire early, as the stock market goes down. Lower the stock prices, higher the starting yield. So that's a good thing. More cash flow, more passive income. Anyways, I'm going to share something, and if you've been following me on Twitter, you already know this, and so I'll link in the description below. Check me out on Twitter. I share a lot of insights in real time. I saw the other day that Barrons posted something real interesting. Barrons posted an article that basically said now, just now, in the high 20s, Warren Buffett, aka Berkshire Hathaway, through his holding company, Berkshire Hathaway, are actually losing money on Kraft Heinz. But before that, they were fine. They were making money. And so this goes back to my original points. I'll link in the description below. Did a whole series of videos on Kraft Heinz. One of the reasons I don't like this stock from the get-go is there's a lot of financial engineering behind it with Warren Buffett, with 3G Capital. They basically orchestrated a really good deal for themselves. I used to be a shareholder of Heinz. It got taken out, got taken private. And I feel like the Heinz shareholders were not paid a fair price, got kind of done through private equity, got engineered, brought back public with the Kraft company. And anyways, through all of that kind of taking things private, bringing it public, this and that, Warren Buffett, 3G Capital, they really had a really good cost basis in this company. And so anyways, they had a cost basis that until now, it was not possible for the average investor to have. The average common shareholder, they could not get that kind of cost basis. It was never possible until now, after the thing has fallen from a high of $96.65 in 2017. Now in 2019, it's down to $27.65. But before then, there's common shareholders bought as high as $96. And so when I see a situation like this, I see a situation where the common shareholders are kind of getting the short straw, in my opinion. It's just never something I want to align myself with. And so at the end of the day, I'm not going to be buying Kraft Heinz. It's just not for me. I was thinking, hey, maybe I'll dip my toes in the water in the high 20s. But the fact of the matter is there's just too much that can go on. What if Warren Buffett, what if 3G Capital, Berkshire Hathaway they go ahead and they take this thing private again. What if they do that? This is something that's really possible. It may be in their best interest, but not in the best interest of the common stock shareholders. And so just because of these events that have unraveled here, and the fact that literally Buffett and Berkshire are just now underwater after the common shareholders have suffered so much losses, I just cannot align myself with this company. I just don't know what's going to happen. If they take it private again, the common shareholders may get the short straw, and I feel like the common shareholders have already gotten the short straw on this one. So yes, the starting yield is attractive. Yes, this thing is a value stock. I like to buy value stocks. I like to buy dividend stocks that go down. But kind of the few cardinal rules, I would say there's 2 or 3 cardinal rules that are broken here. One, the owners in the company, I don't feel like their interests are aligned with mine. They're playing by their own rules, and I don't think what they do is necessarily going to benefit the common shareholders. That being said, looking at another stock that Warren Buffett owns, Berkshire Hathaway owns Coca-Cola. In terms of full disclosure, I'm long Coca-Cola, ticker symbol KO. What if, I feel like my interests are really aligned with his there. He just wants the company to thrive. And so he just wants it to go up and to the right. But at this point with Kraft Heinz being a smaller company, not really knowing what's going to happen behind the scenes, I don't necessarily feel like my best interests are aligned as a common shareholder with Berkshire's in this particular situation. That's kind of rule 1 I don't want to break. Rule 2, I don't like dividend cuts. They had to cut the dividend, and so that's a big deal for me. Not a complete deal breaker, but it's a big deal for me. Rule 3, honestly, is I've got enough exposure to this industry, to this consumer packaged goods, and I feel like I have other positions that I actually think are better positions, like General Mills. In terms of full disclosure, I'm long General Mills, ticker symbol GIS. And so I feel because of those reasons, Kraft Heinz is not for me. That said, as I've always said here, I wish everyone, all the common shareholders here in this community and further and beyond, all of you guys, the best of luck. I'm rooting for you. I hope this turns around. I hope it does well. I love you guys. I wish you the best. But that's why Kraft Heinz, even in the high 20s, it's not for me here. And quite frankly, there's just so many opportunities out there in the stock market. It's hard for me to add a net new position to my portfolio when there are other deals out there right now that I feel are more attractive for me as a long-term investor, where my interests are aligned with those of the management team, of the owners, of the board of directors of the company. And one of those is 3M, which I'm going to discuss next. So great question. Moving on to question 2. The question really was, more of a statement that I wanted to address. The subscriber said, 3M is killing me, watching my capital go down, my capital losses. And so on paper, at least. And so this is from a subscriber who started buying 3M recently. Anyone buying 3M recently, myself included, is underwater. The stock continues to go down. In fact, today it hit $159.75. That's where it closed. Can't believe it. I'm hoping next week I can buy some shares of 3M in the 150s. Unbelievable. And so this subscriber is just making the comment, hey, it's hard to see these capital losses. And so I wanted to address this because a lot of subscribers here are newer. They haven't gone through a horrible down market yet. And we're not in a horrible down market yet, but certainly the market's starting to correct. We're seeing a lot of red. And I think that will continue. I hope it continues. It's good for dividend investors. But there's kind of 2 things or 3 things I want to address here. One is the haters. When these stocks start going down, people are going to come out of the woodwork and they're going to say, hey, I told you so. The dividend strategy doesn't work. You're just going to lose money. These stocks, yeah, they pay a dividend, but they go down. And so my thought on that is just ignore them. The haters, they will come out of the woodwork, especially in a down market. Don't pay attention to them. But the second critic that's going to come out is yourself. It's going to be psychological. You're going to log into your accounts. You're going to see that the stock is down. You're going to see some trends that look unfavorable. My strategy for that is I just don't log into my brokerage accounts every day. I don't check it out every day. I try to stay away from that. And then the third thing, though, is the cash management. And so in these types of situations, even right now, I find this challenging for myself. When the deals appear, it is so tempting to buy. But the key here is you don't want to get ahead of yourself. You don't want to spend money that you don't have. You don't want to tap into your emergency fund. You want to be smart with the cash management. So I have to remind myself of that all the time. And so 3M, it's at $159.75. If I take the quarterly dividend of $1.44, multiply by 4, divide by that share price, now the starting yield is a 3.6%. This is unfathomable for 3M. I love it. I will continue to buy. I will continue to average in. In terms of full disclosure, I'm long 3M, ticker symbol MMM. And so Great question there on 3M. Again, this wasn't really a question, but a comment, but I think it's really important to point this out to everyone that, yeah, it's going to be a little psychologically hard here to see the market go down, but it's just these times that dreams are made. It's just these times that portfolios are built, that it is so much better to be accumulating stocks in this kind of market than a market that is surging up into the right. All right, everyone, so ready for the third question. I apologize. I know this video is real choppy. I've had to start and stop a few times here. I hope you guys are okay with that. I'm doing my best. The reason for that is it's really warm in the car now, actually, and I had to turn on the air conditioner, and so hopefully this background noise, you can't hear the air conditioner. But anyways, the question is from Mike. Mike is a colleague of mine, actually. Thank you, Mike. He reached out on Twitter. Mike, you're the best. You're awesome. You're one of my favorite business partners in the world. And he's wondering what platforms, brokers I use. And so, boy, I'd love to answer this question because I've gotten this since day one, since the early days of my YouTube channel here. And I've always never been able to really touch on this question. I'm glad I can do it now because so many people have asked me. At the end of the day, historically, what I've said is, look, I like the big brand name brokers, those that have a big brand name, they have the credibility, they've been around forever. I also like dividend reinvestment plans, and I'll link to a description to a video on that below. The reason I have not gone a step deeper than that to share the precise places where I have my accounts is, look, I have a public channel here, it has a lot of views. I have disclosed my entire dividend stock portfolio. I'll link in the description below if you want to check that out. I am careful. I'm a little bit careful here about my personal security of my assets because I have built up a nice portfolio, a really great portfolio that I'm excited about and proud of. And I just don't want to give away precisely where I'm holding specific funds. And so this is a question that has been asked of me, and so I need to address it because everyone asks it. I've been asked this question at least 100 times, and I've never quite answered it, I think, the way people want, but that's why. Now, I'll tell you, if you're just getting started out, there's so many platforms, I don't think you're going to go wrong. And so I'll tell you, I've talked about how I'm going to start a new portfolio just to pay dividends that I'll use to pay for vacations. That one I'm probably going to do with M1. I've heard so many good things about M1, so I'm going to give it a try. And as I go through that process, I will share my experience with all of you. I will share my M1 experience. But for my existing portfolio, for the lion's share of my assets, I don't want to go in specifically to where I have what and which platforms I use for just the simple reason of security. But what I can tell you is if you're getting started out, you're trying to figure out what to use, go with one that is insured. So you want to make sure it's SPIC insured. Optimally, it will also have backup insurance, so extra insurance above and beyond the SIPC limits. And go with one that has a good brand name, good reputation, been in business a long time, all that good stuff. And so, and if you go with the dividend reinvestment plan, typically I would try to find one that is with a transfer agent that has a very good track record, that has been around a long time, that handles a lot of different plans. And so it just goes down to that research. Now, I don't get overly concerned with commissions. A lot of people do. The reason I don't is the commissions in relationship to the size of my portfolio and what I've been investing, they're just not very consequential, and they're a one and done thing as well. For a dividend investor like myself, because I buy and hold forever. I'll link in the description below where I actually shared a video of all of the purchases I've ever made and what my commissions average out to, and I talk about that. I think it's a really fascinating video, one that goes through a lot of data, and so you guys may want to check that out. But that's kind of the genesis, that's the data behind why I'm not overly concerned with commissions. I know a lot of people are. I think a lot of people get concerned with commissions because the industry promotes, hey, you got to minimize your commissions. The reason the industry promotes that is to sell you on index funds with low commissions. But a dividend investor, index fund actually has ongoing commissions, ongoing fees most of the time. But as a dividend investor, oftentimes it's one and done. You pay the commission, you buy the stock, but then ongoing, it's oftentimes free. And many brokers offer free, many brokers and many dividend reinvestment plans offer free reinvestment of the dividends. And so I'm not overly concerned with commissions. Where I get more concerned is with security and with brand name and with reputation and with the ability to be there for the long term when I need them. And I certainly don't want to be switching brokers. And so I want to make it real easy on myself to go with the biggest and best. And so I hope some of these insights help you decide which broker to go with. Now, I'll also tell you to be cautious. There's other channels here on YouTube. A lot of people, quite frankly, are talking about this broker or that broker because they're part of the affiliate program and they get a commission if you're to sign up through their link. And I'm not saying that's right or wrong. Look, I've done affiliate marketing in my past. I actually will probably do some affiliate marketing here on this channel, potentially in the future. And so on my website, I've got some affiliate marketing. On my blog, there's nothing wrong with affiliate marketing. In fact, I love affiliate marketing, especially if you're aligned with a brand that you support. But what I'm saying is just be careful of the source. Consider the source. Be careful with the source because just make sure that they're not promoting it just because they're affiliate, that they're an affiliate because they love it and they're promoting it. The affiliate thing is secondary and not primary. And if it's a secondary thing and they're first and foremost promoting it because they love it, that's different than promoting it because, oh, I can earn some money because I'm an affiliate. And so just consider the source. I guess that would be one thing that I would say to everyone out there. And so that is the third question. Thank you, Mike, for that question. I really, really appreciate it. And so I want to hop on to the fourth question today. This one's about Bitcoin. And so the question was actually about Bitcoin, but I've received other questions. Ian, do you think these Bitcoin advances are going to be favorable to the chip makers like NVIDIA? On that side of things, I don't know. I don't follow the chip makers too closely, but I do follow Bitcoin closely. If you followed my story, you know I made a lot of money on it in the last run up. I took that money, I redeployed it into cash flow investments. That's always my strategy with these kind of things, with angel investments, with Bitcoin. If I can make a big profit, I'll take that money and transition it into my bread and butter cash flow. But anyways, I'll link in the description below to the video about how I made money on Bitcoin last time. And when Bitcoin kind of bottomed out a while back in the 3,000 range, I started accumulating again. I started buying a very small amount, and I've been averaging up. I've been buying in the 3,000s, and then each kind of $1,000 tier as it's gone up, I keep buying. And I'll keep buying till as long as it's under 10,000. And so in terms of full disclosure, I'm long Bitcoin, BTC. And anyways, this goes along with another question I got. What's your favorite tech stock? I don't have a favorite tech stock. And he meant tech stock that doesn't pay a dividend. If it were tech stock that pays a dividend, trying to think, the only ones I own are Apple and IBM. In terms of full disclosure, I'm long Apple and IBM, ticker symbols AAPL and IBM. I own those. Those would be my favorites. Probably if I had to pick one, maybe IBM, higher dividend. Feel like less volatility going forward with all this trade war drama. Boy, anyways, I actually look at this trade war stuff positively. It's going to create a lot of problems in the short run. It's going to create problems for these companies, for consumers, for our economy. And I'm in general not a fan of the trade wars, but it's good for investors who have a long-term perspective like myself, forever basically, because it's going to create a lot more red. Stocks going down, good time to buy in my opinion, psychologically difficult, but I've been through it. I don't even look at the prices. I look at the share prices, but I don't look at my portfolio value very frequently at all. I stay away from it, and it's just made it easier for me. And I feel, I'll tell you, going back to that topic again, when you get more like a bigger portfolio like I have, you've been doing it longer, the portfolio value, I guess, you just become kind of comfortable with it. It doesn't much matter. I don't know why. I just don't really care anymore what the value of the portfolio is. I only care about the dividends, and it just becomes easier over time. You're asking me what's your favorite tech stock that doesn't pay a dividend? It would be Bitcoin. And you ask me Bitcoin, that's not a tech stock, but it is. And so I am no expert in Bitcoin. I've read a few books on it. It's confusing as heck, but I'm learning. And why I like Bitcoin is it's the largest, most sophisticated distributed computer network in the world. And you say, hey, this ain't a company, but you come to think about it, it kind of is. It's got some of the most sophisticated engineers in the world working on it. It's global. It processes, from my understanding, more global payment transactions than other networks out there. And it's quick. It's the most efficient way to transfer money internationally. I follow this guy, Anthony Pompliano, Pomp, on Twitter. Check him out. He shares a lot of helpful insights, and I subscribe to his newsletter as well. He has a cryptocurrency newsletter. I pay for this service. he shares a lot of insights. I don't want to rehash them here, but basically each year the advances in Bitcoin, they're coming. The network's getting stronger, the network's getting bigger, it's processing more money, it's doing more transactions. And so my thesis at a high level, and again, I probably sound ignorant here because I am as it comes to Bitcoin, but I know enough. I know enough to appreciate the technology, is that this really is a company. It's just not a company in the traditional sense. Doesn't have a CEO, doesn't have a board of directors, doesn't have financial engineers going back to Kraft Heinz who can torpedo the whole thing and only start losing money when it's in the high 20s, when the common shareholders are losing since 96. It's completely decentralized. It's completely decentralized, and it is a way for to basically disintermediate the traditional financial system and the banks, and it's basically taking payments and money to the internet age. And so I think there's a lot that could go wrong with Bitcoin, so much that could go wrong with it, especially governments just stepping in, shutting it down, saying, hey, you can't have Bitcoin. But the way I look at it is it's going places. It's going places because the big engineers, the big investors, the big VCs, they're all behind it, and it's a really cool technology. And so the fact of the matter is I have a real small Bitcoin position here. It's basically one of the only things I have that doesn't pay a dividend. I have a few angel investments as well, but Bitcoin obviously doesn't pay a dividend. My strategy is to have a real small position, less than 1% of my overall portfolio. As it goes up, I think it's going to go up somewhere like $50,000, $100,000 per Bitcoin. When it gets up in that kind of range, I'll sell half, I'll plow half into cash flow stuff, dividends, maybe my vacation fund, because I need more vacations, vacation portfolio, but I'm going to keep half, and I'm just keeping, this time I'm keeping half for the long run. I want to see where it is in 10 or 20 years from now. I think it could be a hugely profitable investment. That being said, there's a lot that could go wrong, but that's my favorite tech stock. And look, I know I'm going to sound probably pretty ignorant on it here because it's very complex and confusing to explain it. I don't really understand it fully. I understand a traditional tech company like Google, for example, awesome company that owns YouTube, which I love so much, one of my favorite platforms in the world. I can completely understand what that and explain what that is. Harder to explain Bitcoin, but I am starting to truly appreciate Bitcoin and everything that comes with it. So that's my favorite tech stock. I think it's going up from here. I'm taking a small position. I have a small position again. I'm long on it again. Did well last run up, sold last run up because it went up so fast. This time though, I'm taking a different approach. I'm only going to sell half when it hockey sticks again, may come down again, but I'm keeping half for the long run. And I'm actually just kind of averaging in now on kind of a every few week basis, every 2-3 weeks, I put a little more money into Bitcoin. Great question, everyone. And that kind of answered 3 questions in one. What do I think about Bitcoin? What do I think about the chip makers? I don't know about the chip makers. And then what's my favorite tech stock? It's Bitcoin. And so thank you, everyone. Last question today. So this one is more of a request slash idea, but someone was asking, Ian, where are your videos for beginners? This channel is just growing really quickly. And so I'm so blessed. I love you guys. I want to give you a few things here. One, if you're a beginner, you're here, you're kind of lost. Ian, what are you going through all these things? You're in your car, you're sweating. What do you got a crazy video today. What is this? What do I even do with this? If that's you, check out the tab in my YouTube channel. Go to my channel, go to the videos tab. It'll sort all the videos in order. Go back to the early ones. There's a lot of early on videos. Those are more geared towards beginners. And so that's a good place to start. Another good place to start is on my channel homepage. Go to the various playlists. Go to my playlists tab. Check out all the playlists. There's going to be a lot there. The ones that talk about like how to invest $1,000, how to invest $10,000, how to invest $25,000. Those are good ones for beginners. And so all of that is good for beginners. And quite frankly, what I'll probably do is curate my videos and come up with a playlist for beginners. I think that'll be helpful. If you're looking for, Ian, what do you think about a specific stock? I'll tell you this. I know a lot of people come here, they're like, Ian, what do you think about Kraft Heinz or General Mills? In terms of full disclosure, I'm long General Mills, ticker symbol GIS. What do you think about that? Most of my videos, they don't have the stock tickers or names in the title because I create these titles in an effort, these kind of catchy titles in an effort to get some views. And so anyways, It's hard to find those videos sometimes. Well, here's the hack. Go to YouTube, go to the search bar, type in ppcian with no spaces, and then just type in a ticker like KHC or GIS. It'll pop up the right video to the top. And so if you're ever searching for a video, you want to know what I think about a specific stock, look up ppcian, put the ticker after it. You will find those videos. They'll come up to the top of the search results because I have the tickers in the videos, in the tags, in the description, and YouTube's real smart. YouTube will just bring them to the top. But I want to do even better than that. I'm just trying to give quick tips here because I know I've got a lot of new beginners coming through recently. I love you guys. So happy to have you here in the community. I am going to be writing a post for my blog, ppcian.com. It's going to be a guide on basically where do I start? What is this stuff? What am I even looking at here with this dividend stuff? I don't know. I'm coming in and again, you're doing all these questions and it's great, but it's kind of confusing. I'm gonna have a post for all of you, so just keep an eye on my blog. I'll have that live within a week or two, ppcian.com. I'm just gonna sit down and start something for you beginners, the newcomers who are here, because our community is expanding. And it's always a good time to revisit the beginners, the basics, and even us seasoned investors, it's good to review the basics. I know there's a lot of investors here on this channel who go back in time and they look at the old videos. And what's funny is sometimes I go back to my old videos to remind myself of what I thought at a certain time, and I learn from myself because I forget stuff. And so it's so helpful to have those kind of references, and I appreciate it. Anyways, everyone, I did the disclosures throughout the video today. I thank you so much for bearing with me on kind of the crazy video today, just kind of hacking it together, but I feel like there's some good stuff in here for you all. I hope you enjoy it. And before I go today, by the way, I'm going to do another meetup in San Francisco coming up soon. And so I'm going to link in the description below to the local crew. If you're not on the local crew mailing list, email list, make sure to get on there because I'm going to send out an email to everyone soon trying to coordinate some dates. We're going to do another meetup, Starbucks Reserve, San Francisco. In terms of full disclosure, I'm long Starbucks, ticker symbol SBUX. We have so much fun at these meetups. We talk dividend stocks. We make friendships. My friend Sam, for example, I'm friends with him on Twitter. Met him in person a few times. Really, really sophisticated dividend investor. Would have never known him if it weren't for these meetups, and we've become friends, and I'm so thankful for that, and a number of other similar friends that I've made from these meetups. And so I encourage all of you to come to the meetup if you are in this area. Even have my friend Faraz from Los Angeles who drove up to one of our meetups in San Francisco with his friend. They drove up, they attended. Really, really powerful experience meeting him and his friend. And so we all have so much fun at these meetups, and that's what this is ultimately about. Dividend investors supporting other dividend investors. We're a community. It is so much fun here. We're here to have fun while earning cash flow, and so keep an eye out for that. I'm probably going to do the next one in July, so nice summer meetup. Before I leave today, in terms of a disclaimer, today's video is not investment advice. I'm not a licensed investment advisor. Today's video is just for your fun and entertainment. If you're going to go out and invest money in the stock market or anywhere else, please consult a licensed financial advisor first. Literally just sharing my insights here on YouTube for fun and entertainment, just sharing my personal journey. All right, everyone, I will see you in the next dividend investing video.